let's do something with that capital gain. We have to deal with tax in this country. Because capital gains are a form of income, the government taxes that income. They're going to take a piece of it. However, there's a trick to it. There's two formulae for the taxable capital gain. The government tries to encourage people to hold on to their shares for at least 1 year. They don't want ordinary people to be buying and selling shares and making money off of it. Only stockbrokers should do that. So what they do is the part of your capital gain that is taxable, what they actually look at to tax, changes depending on how long you've had the shares for. So if you hold the shares less than 1 year, the taxable capital gain is all of the money that you made. The government is going to tax your whole capital gain if you held onto the shares for less than a year. But here you can see, if you hold onto the shares more than a year, the government is only going to tax, if I times something by 0.5, what fraction of it do I have, yes?
1/2.
Half. So would you rather the government take 30% of your whole $1,000 capital gain, or would you rather they take 30% of 500 of your capital gain if you just held onto the shares for a year? So get those two formula down, please. The taxable capital gain that the government's going to tax changes based on how long you held the shares for. Just that before I explain this little green table. You do not need to get that table. All right, Australia is like most first world countries. The tax you pay depends on your overall income that you make for the year. Do you guys know when the financial year starts and ends? Yeah, well, just like at the end of June. So July 1st is when the financial year starts and then goes to June 30th. Okay, so that's when your tax gets done. This is important to consider because you use tax tables like this. There's one in your book to determine the marginal tax rate that will be used to tax your capital gain. So you can see here, this has actually changed. Your book is older than the latest tax brackets. This is still correct. If you earn less than 18,200, government takes nothing. I just don't remember off the top of my head. One of these is missing now. In the middle, it's changed, and the highest is still the same. So if you're earning 180 grand or over, government's taking 45% of your income basically. Why? Because you can freaking afford it, right? You're earning that much. You don't need this on your cheat sheet. I'm just showing you this because this is in your textbook, and this is what you're going to use to answer the capital gains tax questions. But in the test, you'll either be given this table or I'll just tell you the tax rate to use. So don't bother copying it down. It's so that you know this is what you're going to use in your textbook, okay? Now, to calculate the capital gains tax, you clearly need to know your overall income to determine your marginal tax rate. You can use the following formula to find the capital gains tax and your after-tax returns. So your capital gains tax is the taxable capital gain. That changes based on how long you had the shares for, times the marginal tax rate as a decimal. Then after-tax return is equal to capital gain. Take capital gains tax. Get those two, please. Writing time. Get the example as I read through it. You might not be able to be here for the full example, but at least get the example down, and you can see the answers from the video. Calculate means lots. That's a revelation. So the example we're going to work through, Cassie purchased 3,000 shares, $6.75 each, sold them later for quite a bit more. 9 months later, so less than a year, brokerage is 2%, and she earns $90,000 per year. So highlight, I'd encourage you to do this for this subject, highlight the important numbers. Does anyone care that it's Cassie? No, that doesn't come into it. Does it matter that we have 3,000 shares?
Yes.
Why?
Because that's the amount of shares we're doing our calculation.
Which part of the maths do I need the 3,000? The consideration? I need to know the consideration. Does it matter that it's $6.75? Because I need to do the buying maths. Do I $8.98? Because I need to do the selling maths. 9 months, because I've just introduced this idea that the tax you pay changes based on whether you held the shares less than a year or more than a year. Question?
Would it be like both the partners' salaries combined?
Depends if you've registered as a couple or not. Okay? Brokerage is 2% is relevant. Cassie's salary is relevant. Why? Because we need to work out how much of how much of her money the government's going to be taking. Okay? So calculate Cassie's capital gain. We just did that in the previous lesson. We need to do a buy. What are the 3 parts? Cons, Brock, GST. Consideration, 3,000. Lots of $6.75 equals, wrong side, 3,000 times $6.75. 20 grand. She's got 20 grand to spend on. 20 grand is $22.50. I need to work out, because this isn't flat fee brokerage, it's 2%. What's 2% as a decimal?
0.02.
0.02 times by 22.50 times by 0.02, 405. And GST, 10% is 0.1. What, 10% of 22.50 or 10% of 405? 405. That's going to be $40.50. Because it's addition, I can add them vertically. 5059,602. It's going to cost her $20,695.50 to buy these. Why did I do the buy? Because I need to sell them and find the capital gain. Cons, Brock, GST. I sold 3,000 of them, but what did I sell them for? $8.98. That's going to be a bit bigger. 0.02 times by 3,000 times by $8.98. 26,940. 2% of 26,940 is $538.80. GST, 10% of $538.80. $53.88. I need to use the calculator for this. 26940 minus 538.8 minus 53.88. $2,634.7.32. I'll give you some time to get those two down. You might not like that I'm doing it all by hand like this, but this is literally what I'm asking you to do. This is what you're doing in the test. So that's A. Oh, I haven't even done A yet. I'll move it down. A is going to be return from selling, cap, gain, equals 26347.32 minus 20695.50. Take 2695.5. Made $5,651.82. B. Do I need to times her capital gain by a half?
No,
Why?
because she only held it for 9 months.
She held it for less than a year. Government wants you to keep it for a year. So they taxable cap gain is going to equal $5,651.82. Government's going to look at all of that money to tax it. Calculate the cap gains tax that Cassie must pay. Cap gains tax is the taxable capital gain, 5,651.82 times by. What does the formula say? The marginal tax rate as a decimal. Don't be tricked. She's earning 90 grand, right? So right now, if she's earning 90 grand, which of the income ranges would it be? The 37%. But I may or may not, in your test, try to make it harder by, if you've made a capital gain, is that going to push your income up? So if she was, let's say, she was earning 70,000 per year, what bracket would she be in? Here. But if she earned $10,000 in capital gain, would she be pushed up by that? Be careful. Is it going to apply here though? She's in this bracket, 37%, and her earnings isn't going to push her next. But just a, I don't know, MLG Pro hint, 37%. What's 37% as a decimal? Yes?
0.37.
0.37. What is 37%? 0.37. Not 3DP. 2. Government is taxing her $2,091.17. So she was happy. She was making a rain. Look, all that money I earned, 5,006. Oh, you're taking like 2 grand, what? Right? D. Calculate her after-tax return. After. Oh, spell after wrong. English is my second language. After-tax return. What is a return meant to be? $5,651.82 minus government getting in there. Not being nice. 5,651.82 minus 2091.17. She only takes home 3,560.65. Why did this move? Now before I start E, does anyone have any strats to answering E? Try to do a shortcut there. What could I do to answer E without having to read all that maths again? Yes?
Well, what you could do instead of, since buying and selling is going to be same price anyway,
Yes.
simply skip that from the capital gains, like past capital gains and instead replace the taxable capital gain,
Yes?
we would divide the capital gain by half.
Yes? So,
And go from that.
because what we're saying in the last one, if Cassie could make sure that she sells it for the same amount, but after a whole year, how much of her tax is the government how much of her cap gain is the government gonna look at? The whole thing? Half of it? So you could start off with her cap gain 5651.82 divided by 2. 5651.82 divided by 2, halve it, so 2825.91 taxable cap gain. Government's going to take 37% of this. 37% of a smaller number is better on her, from her point of view. 2825.91 times by 0.37 times by 0.37, 1045.59 to 2 decimal points. Her after-tax return is going to be nicer now, because she's meant to earn 5651.82. But what's the government going to take away now? Is the government still going to take $2,091.17? No? It's going to take $1,045.59 just because she held on to it for a year. 5651.82 minus 1045.59. So she takes home a bit more. Does that actually answer the question though?
No.
Why?
Because it asks how much better off would she be?
Yes, that would be worth 1 mark in your test. So if all you told me was this, that's fine, you'll get 3 out of 4. Yes?
You could have also just halved how much the cap gain tax was and added it on.
Yes, good. Lucky that's good that that's on the recording. You could do a shortcut like that as well. Either way, as long as you get to the same answer. So 4606.23 minus, what was she going to get before? 3560.65 is how much better off. Say 3560.65. She's going to be $1,045.58 better off, which you can see there's a little rounding inaccuracy there, but can you see how we saw that number previously already? So that's the shortcut that he was talking about. You're better off by half of the capital gains tax. Right?